and thank you for joining us today for this seminar presented by ARTA's Pension and Financial Wellness Committee. We're pleased to offer a series of financial wellness seminars throughout the year to create an opportunity for education on topics specific to retiree financial wellness. Since ARTA was formed in 1963, we've focused on supporting our members in an engaged and active lifestyle in retirement. Our holistic approach includes one of the best benefit plans in the country, as well as many additional programs and services, including our ARTA Perks discount program, physical wellness events, social opportunities offered through our regional branches, scholarships for family members, and of course, seminars just like this one. ARTA also serves as an advocate for teachers and retirees, using our collective voice to draw attention to the ATRF and teachers' pensions, the seniors' drug plan, and most recently, the impacts being felt in healthcare in rural communities. There are many different factors that allow ARTA to maintain such a wide reach, but in the end, because we were created by retired teachers for retired teachers and like-minded professionals, we will remain dedicated to retirees. With that, I'll pass things off to the chair of ARTA's Pension and Financial Wellness Committee, Ray Hoger.
Welcome and good afternoon. My name is Ray Hoger and I'm the chair of ARTA's Pension and Financial Wellness Committee. I'm joined today by Pension and Financial Committee Wellness members Blair Lowry, Larry Hartel, Craig Whitehead, and by ARTA's treasurer, Lawrence Ryken. As you may have noticed, we have disabled attendee video and audio capability. This will help ensure a quality experience for all participants by limiting web streaming. It also allows us to record this webinar without breaching your privacy. With your audio muted, we encourage you to use the Q&A feature found at the bottom of your screen to submit your questions. You can submit questions publicly so that all attendees can see them, or submit them privately so that only ARTA staff will be able to see them. Our team or the speaker will respond to the questions as they arrive or at the end of the webinar. A reminder for participants that this presentation is for informational purposes only and should not be used to replace a consultation with a trained legal, tax, or financial professional. Please contact a professional for financial, tax, or legal advice related to your specific circumstances. With those housekeeping matters completed, ARTA is pleased to present today's session, an informative presentation of the ATRF's 2023 annual report. This webinar will be of interest to retired teachers as it pertains to the health and longevity of pensions for teachers in Alberta. I would like to welcome today's speakers, Rod Matheson and Julie Joyal from the Alberta Teachers Retirement Fund. I hand it over.
All right, let me begin. Thank you, Ray. Thank you, Scott, and all of our friends at ARTA. I am the CEO at the Alberta Teachers Retirement Fund, and my colleague Julie Joyal is our VP of Pension Services, and the two of us are going to do a bit of a tag team today. And as you said, Ray, we're going to primarily provide you with an update and a nice report on our most recent results. Our fiscal year is August 31st, so the last few months have been very busy as we've wrapped up our fiscal year, and the board of ATRF has done a lot of work and made decisions with respect to funding and contribution rates, and we've received our annual results. So we're going to share all of that information with you. It's still very new. The board only approved some of these things at a meeting in December. We've shared it at a high level also with our two plan sponsors, so we're going to use that. But we've got a few other things that we think would be of interest to this particular audience. The plan is for Julie and I to talk for about 45 minutes and then leave lots of time for any kind of discussion or questions that there might be. So with that, let me begin. I'll cover the first part and then I'll hand it over to Julie. Let me just talk very briefly about what we're going to talk about. We're going to talk about your pension plan, the governance of the plan. We'll give, as I said, we'll give you some update on the results for last year. Then Julie's going to talk about member services at ATRF, and a topic that is probably near and dear to your hearts and your wallets, our cost of living adjustment for retired members, and a little bit of what's coming up in the future for ATRF. And that we hope should take no more than 45 minutes. So let me start with this slide. it's one that we use often, and it's worth spending a minute to talk about. Just a couple of things that I'd like to point out. Some of it should be obvious, and some of it for this audience, given that you are already in retirement and receiving your defined benefit pension, should be kind of obvious to you, but it's still worth spending a couple of minutes. You're on the left end receiving your secure retirement income. You indeed know the value of a defined benefit plan, and you would likely know that people who receive defined benefit plans are in the minority of folks. It's something that you get a benefit, it's predictable, it's indexed to inflation. You're living that part of this chart. You know that your pension came as a result of contributions that were made both by members, employees, as well as employers, or in this case, for this pension plan, the government of Alberta directly. Those contributions are pooled and invested, and that's what produces the funds that we're able to use to pay pensions. One thing that I did want to just pause on and mention that's of interest, I think, is statistically, or based on a lot of financial analysis and across all defined benefit pension plans, the contributions that come into the plan over the career of members, both the employer and the employee contributions, only represent about 25% of the total amount that's used to make pension payments. 75% of the pensions that we pay out are a result of that ability to pool those contributions, let the power of compounding and good investment management do its job, and provide the funds that are used to pay the pensions. And then the final piece of this picture is if there are any, in terms of the risk to a pension plan, if there are any deficiencies in the future, those are the responsibility of the active plan members and the government as the two contributing bodies. So the next slide is also one that we often use, and I'll only refer to a couple of things on this. It's kind of just to show who's who in the zoo, if you like. We on the left side, ATRF, as trustee and administrator, those are two very important legal roles that are defined in our Act. And then we also view ourselves very importantly as a trusted advisor to our key stakeholders, which would include the sponsors on the right side of the chart, the Government of Alberta, the Alberta Teachers Association. We certainly view ARTA as a key stakeholder as well. We want to have, and we do have a good relationship with ARTA, and we do view ourselves as a trusted advisor and want to play that role. We are the experts when it comes to the Alberta Teachers Pension Plan, and we want to make sure that all of our stakeholders are making proper informed decisions and receiving appropriate information and advice. So that's the role that we play. We take it very seriously. You can see the responsibilities, what we do as trustee and administrator on the left in operating the plan, paying the benefits, ensuring the investments are properly, or that the plan is properly invested, and delivering services to members. But here's the important distinction is the plan sponsors. It's the Alberta government and the Alberta Teachers Association under the plan's legislation that establish the plan rules. We do not change the plan rules. We have no power to change the rules of the pension plan, the benefits, or any of the conditions of the pension plan. Those are left up to the two sponsors. That often comes up when people wonder, well, why don't you change the plan? We have no power to change the plan. That's up to the Government of Alberta and the Teachers Association. So let's move on to the next slide, Julie. Again, just a little bit of an advertisement for ATRF. We have been around. In fact, we were talking earlier this morning, we'll be celebrating the 85th anniversary of the Alberta Teachers Pension Plan and Alberta Teachers Retirement Fund. For all those 85 years, we have been the body that provides that professional pension management to ensure that the pension plan is well managed, well invested. We deal with all of the strategic aspects of the funding of the plan, the investments of the plan, overseeing the risk management. You can rest assured that, and the message we want to leave with our key stakeholders is rest assured that we've got the expertise, the experience, and the dedication to make sure that your pension plan is very well managed and very well and sustainable. So let me now turn to some of the specific highlights of the last year and talk about the plan's funded status and bring you some good news when it comes to the funding of the teacher's pension plan. So with a bit of a drum roll and this is a very major event in the history of the Alberta Teachers Pension Plan. For the first time in its history, the Teachers Pension Plan is what we call fully funded. And I'm going to tell you in just a moment on the next slide what that means when we say fully funded. You can see what we call our funded ratio in 2023 when we received the results that the actuaries produced to show us the funded status of the pension plan. We have, as I said, for the first time achieved a funded status of greater than 100%. The plan is fully funded. The private school teachers pension plan, which we also administer, which is very small, but it has been fully funded. It has been in a fully funded situation for several years, but the key plan, the teacher's pension plan. So let's go to the next slide and I'll tell you what it means to say fully funded. When a pension plan is fully funded, what it means is that the assets that we have in the pension plan, and you can see that on the top of this kind of condensed balance sheet, the market value of the assets was $22.7 billion at the end of August last year. We apply a bit of a risk management tool, which we call a fluctuation reserve, which helps to smooth investment returns over 5 years to remove some of the volatility that happens in the capital markets when you've got investments in all of the publicly traded stocks and bonds and all of the other private asset classes that the plan is invested in. There's volatility from year to year. So this is a tool that we use to smooth some of that out. So that provides a little bit of a buffer. So we would say, or the actuaries to be precise, would say the value of the assets for the pension plan were $23.49 billion at the end of our last fiscal year. Now, the next piece is the liabilities. So what the actuaries do is they literally look at every life in the pension plan and they do projections using all of their actuarial science and the assumptions that they make to come up with and bring back into today's dollars, into August of 2023 dollars, the financial value of all of the future payments that this pension plan will make to its members. And you can see that we break that down between the active teachers, our inactive members, and the pensioner and their beneficiaries, the retired members and their beneficiaries. That value, that $23.2 billion, is the number that Aon, our actuary, comes up with and tells us what, basically, if we had $23.2 billion today, we should be able to meet all of the future obligations. And lo and behold, if you look up above, for the first time ever, we have enough assets in the plan to meet all of the expected future liabilities, which is why we say we have a funded ratio of 101%. The assets are 101% of the liabilities, and we have a small surplus of $261 million. So that's very good news for the pension plan. It's been a long time coming. I'm sure people who have a history with this pension plan recall back in the days when the plan's funded status was much less rosy than this, and this has taken a lot of work by the sponsors, contributions by the members, some good investment returns to get us to where we are today, but it's a very good position. Let's move on to just talk a little bit about how we got where we are and the kind of the prudence that goes into the work that we do and that the board does to make sure that the plan is sustainable in the long term and that this funded status didn't come just by coincidence. And now that we have it, we want to make sure that we keep it and that the plan remains in as strong a financial situation as possible. So we do take a lot of steps. The board looks at a lot of things and takes a very strategic look at how to make sure the plan is sustainable, look at use of risk management tools like a margin for adverse deviation. So we build in margins to make sure that we take account for the volatility that I spoke about earlier with the capital markets. We know that investment returns we have a long-term expectation for investment returns, which we're confident in, but we also know that year to year, those investment returns will fluctuate. So we build in a margin on that to offset some of the volatility there. We also know that the other assumptions that we make in the plan around things like mortality and inflation and salary increases into the future are also unknown. They're based on assumptions. So we want to build in a little bit of a margin for adverse deviation on those assumptions as well, to just make sure that we're being prudent and managing those risks prudently. I want to speak for a minute now on the next slide about a new risk management tool that we as ATRF just obtained last year. And it's most important because, as I just said, as of last year, this pension plan is in a small surplus, but we expect that surplus, we hope that surplus will continue to grow in a reasonable way. And we wanted to make sure that we have the ability to use that surplus as another risk management tool. And our plan had an unusual and a unique provision that wouldn't have allowed that to happen without agreement by those two plan sponsors, by the Government of Alberta and the Alberta Teachers Association. So we spent a great deal of time last year in our role as trusted advisor, talking to those two bodies and explaining to them why it would make sense for us to have, for ATRF and the board of ATRF to have the ability to build up reasonable surpluses and use those surpluses as another risk management tool, as another buffer against things like market shocks or other volatility in the pension plan, and also to use it as a tool to do other things to manage risk. We might be able to use some of that surplus, for example, to purchase annuities and eliminate some of the liabilities in the pension plan. We might be able to use the surplus to change the investment approach so we can take less risk in the investment portfolio. We may be willing to accept a slightly lower long-term expected return, and the trade-off being we would also have less risk in the investment portfolio. We're in the fortunate situation now with the pension plan being in a surplus, we can start to look at those tools, which we were never able to before. So the other part of the funding is contribution rates. And this is very good news for active members. It's of interest probably to retired members, but it's very good news for our active members, very good news for the other contributor, which is the Government of Alberta, because the healthy situation for the pension plan, the fact that we're in a surplus, the fact that we've had some good investment returns over the medium term has allowed the board to make the decision, which they made last month or last fall, to, for the fourth time in the last roughly 8 years, lower contribution rates. So contribution rates for the pension plan effective September 1st of 2024 will go down in total by 2%, which is roughly 1% for teachers and 1% for the Government of Alberta. And as I said, that is the fourth reduction in contribution rates in about the last 8 years. So it's been a very good ride for the pension plan and for at least the active members who are making contributions. And I think, Julie, doesn't the next slide, I think, just shows, this is a graphic that we often use to capture what I just said. You can see the profile of contribution rates over those last roughly 10 or so years. And on this chart, the green bars at the top of the chart, that represents contributions that had to be made between teachers and the government to deal with previous deficits. So back in 2015, this pension plan had a significant deficit. And in addition to teachers paying back then, teachers and government combined were paying 16.2% to cover effectively their current service cost, the cost of another year of their pension. On top of that, they were jointly contributing almost another 10% to deal with the deficits of the past. And you can see the profile there, and those deficit payments have been coming down consistently over this period of time. And the good news is, as I said earlier, with the plan being fully funded, the final deficit payments will be made up until September of 2024. They will fall away. And going forward, the pension plan, the contributions made to the pension plan will be only current service costs, only the costs of another year of pensionable service for teachers at 18.21% combined contributions. So very good news. I'll switch gears and just talk for a couple of minutes about investments at ATRF and our investment results, but I'll start with just a little to set the stage. I'll just talk a little bit about investment management. It's been a topic of a lot of interest by members, retired members, active members, members of the public, because of what happened with the transition of moving investment management of the plan's assets over to the Alberta Investment Management Corporation, AIMCO. So what I want to just say on this slide is it's important that the ATRF board continues to set the strategic asset mix, establish the investment policies and goals for the pension plan, and those are the most important driver of long-term pension plan funding and long-term success. The board also sets a responsible investing policy, and I'll talk about that in just another minute. And then we provide AIMCO with a statement of investment policies and a strategic asset mix, and it is their responsibility to implement that. And our role is to oversee and ensure that AIMCO is implementing our investment policies appropriately. That's the split between us and AIMCO that people often ask us about. So let me just talk for a minute about that and the importance of that. And this chart is not something we came up with. This is based on a lot of analysis in financial literature that in the long term, setting the appropriate strategic asset allocation, getting that investment policy correct, will contribute 90% of the long-term value and long-term success for a pension plan. We then ask AIMCO to take that strategic asset allocation and implement it. And I'll talk for a minute about that on the next slide. But according to the financial literature, the extra value that an investment manager like AIMCO provides if they do a very good job of implementing the strategic asset mix adds another 10% to the long-term success or the long-term value for the pension plan. But what we at ATRF do and will continue to do is really the driver behind the long-term success for the pension plan. So what does it mean when I talk about AIMCO implementing? The next slide shows what our current allocation of what we call our strategic asset allocation, our asset mix, if you like. And I say current because we're in the process. We've just finished a review. We will be asking AIMCO to make some changes to our strategic asset mix going forward, but this is the snapshot of what it looked like at our last fiscal year end. And if you focus on the sections in the inner part of the wheel, those are the broad categories of assets that we consider when we think about what kind of investments make sense for a pension plan. And this is an important distinction. Because we're a pension plan, what really matters and how we invest and why we invest is because we want to meet those long-term future obligations. Because we are a pension plan and we invest to pay off pensions. We don't invest to just try to maximize investment returns and take all kinds of risk. Indeed, what we want to do is make sure that we have assets that best meet the future liabilities. So we look at what it is that would influence the value of those liabilities in the future. For example, I've already mentioned that your pension plan has a cost of living adjustment. So we know that the pension plan has a tremendous amount of sensitivity to future inflation. So knowing that is one of the things that will affect the value of the liabilities. We want to also find assets that are inflation sensitive. That's the section of this wheel labeled inflation sensitive. We know that as a factor, as a major category, we would like inflation sensitive investments. We then drill down a little bit further, and we also know that things like real estate and infrastructure are two types of investments that provide a lot of sensitivity to inflation, have a lot of correlation with inflation. So all of that is the work that we do to come up with the strategic asset allocation. So we deliver to AIMCO something that is the outer wheel. We tell AIMCO that we would like 35% of the pension plan invested in global equities, 10% in private equities, 15% in real estate. It's then up to AIMCO to implement that, and we leave it up to AIMCO to, I'll use global equities as an example. We do actually go one level below that with AIMCO. We do tell them how much we would like in Canadian equities versus international equities. But beyond that, We leave it up to the investment professionals at AIMCO, and they're the ones who decide within the equity allocation that we've given them, how many Royal Bank shares do they think make sense versus how many TD Bank shares, how many shares of Apple versus shares of Microsoft. That's the part that AIMCO is responsible for. That's the part that adds that extra. If they do a good job of that, that will add that little bit of extra return to the long-term returns for the pension plan. And this past year, our results for...
Rod, before I change the slide to the next one, there's a question in the Q&A.
Oh,
what recourse does ATRF have if AIMCO fails to follow the strategy set out by ATRF?
that's a very good question. We do have the framework that we have is that we and AIMCO are signatories to an investment management agreement. And under that agreement, that would be that's the contract between us and our service provider, if you like, our investment manager, that says that their job is to implement our investment policies and our strategic asset mix. And if they do not do that, they would be in breach of the contract. And the recourse we have is not the same as we would have in a commercial arrangement with an external investment manager, because I think probably people are aware our relationship with AIMCO is mandated by legislation. So we have no outright ability to terminate AIMCO as an investment manager if they breach our investment policy, but it would absolutely be the reasons we have provisions built into the investment management agreement that do provide us with recourse in the event that they were to breach our investment policies.
There's another question. It's a little bit broad. It's is AIMCO trustworthy?
Is AIMCO trustworthy? I would say yes, AIMCO is very trustworthy. I have no concerns that AIMCO would not, that they are prudently implementing our investment policies. AIMCO is an organization that is, well governed. They have a board of directors that are charged with overseeing AIMCO and its operations. They are a sophisticated player in the capital markets with, assets under management far exceeding $100 billion. The combination of all of the Alberta public sector pension plans and the government of Alberta's own funds, such as the Heritage Fund and other endowment funds. So they're viewed as a large, sophisticated investment manager. So I don't know what else to say except yes, I believe they would be, and I do consider them to be very trustworthy.
And another one, what's in it for AIMCO?
What's in it for AIMCO is, that's another interesting question, because they're not a commercial enterprise. They're not a for-profit organization. What's in it for them would be their legislated mandate to act as investment manager for their designated entities, their clients, of which we are one. And if they don't do that, then they would be in breach of their own legislation. What's in it for the individuals at AIMCO, I think, is their compensation. And their compensation structure is designed in a way to motivate them to invest in a way that adds the value that I spoke about earlier, that meets the client's needs and does it in a way that adds value. So if those individuals, in the example that I gave earlier, if those individuals in the equity department within AIMCO, if they do a good job of picking the right stocks and making the right calls, that will be reflected in their measures of performance relative to their benchmarks, which will result in them receiving some attractive compensation. So what's in it for the individuals is all driven by us wanting to make sure that their compensation structure is aligned with meeting our interests. And what's in it for AIMCO as an organization is their legislated mandate that that's what they must do. And if they weren't doing it, then I would imagine their clients would be having a conversation with the Minister of Finance or the government about AIMCO not complying or not delivering on what their mandate is. Are there any
That's it
more?
for the, no, no more questions.
Okay.
I will go to the next slide.
All right, let's move on to the next one and just a quick highlight about our actual returns for the last fiscal year ended August 31st. The chart on the left shows you the growth in the assets of the pension plan. And as I said earlier, when I showed the sort of condensed balance sheet, the market value of the pension of the assets at the end of August was $22.8 billion. And that's grown considerably over the last period of time shown here. Our investment returns, if you like, the results. The one-year results were reasonable with a return of 4.39% on the total portfolio. That's better than those of you that might recall the year before. Our results for end of August 2022 was actually a small negative number. Now the 4.39 is a very good number, relative to what was happening in the investment markets for this period ended August 31st. But we don't pay a lot of attention, and we never have, to one-year results because our pension plan is, we hope, going to be around for a very, very long time, and we pay much more attention to long-term returns. So I would draw your attention more to the right side of that chart and the 10-year returns. Over the past 10 years, on aggregate, the pension plan on an annualized basis has been earning a little over 8% every year. And that far exceeds the expected returns that we believe are necessary to provide full funding and to keep the plan sustainable. So we know that there's, as I said earlier, we know there's going to be volatility year over year. Some years we won't achieve our long-term expected return, and over many years, and certainly true over the past 10 years, on average every year, the annualized returns have been greater than the long-term returns that we believe we need. So 8.13 is a very healthy return over 10 years. And it does slightly exceed what we call our benchmark, which is a measure of success. It's a small measure of success, but it does say that relative to things like a public equities benchmark, if you think about equities as an example, we have exceeded what the benchmarks would be. But that's a second order. That's that same thing I talked about earlier. The main driver is that we've achieved 8.13%. The fact that we beat a benchmark over 10 years is sort of secondary interest. So let me wrap up with one more slide. I said I would mention responsible investing.
Before I change the slides, Rod, there's a question asking what benchmark is used.
Well, the benchmark that we refer to here would be an aggregated benchmark because this return is the return over the total portfolio. So that's the combination of the returns that we earned on the public equities, on the fixed income or bonds, and the real estate, the infrastructure, the private equity, and the other asset class we have is what we call absolute returns. That's the aggregated returns. And the benchmark is an aggregated return over, or it's the returns on an aggregated benchmark where we can. So it's a combination of the benchmarks that we set for each of those various asset classes that I described. So for equities, it's easiest to think about that one because it's very obvious. The benchmark, if you like, for Canadian equities would be the TSX, the Toronto Stock Exchange, the TSX returns for the year. And for the same kind of thing for global publicly traded equities, it's easy to establish a public benchmark for that. It's easy to establish a benchmark for bonds because there's industry standard benchmarks that everybody looks at for how a portfolio of publicly traded bonds performed over a period of time. The private assets is where it's much more difficult to establish benchmarks. We do have benchmarks for real estate. There are industry-driven benchmarks for global real estate. Infrastructure is a difficult one. We basically use an inflation-sensitive benchmark. And public equities, we also use the public equity markets. So we do define a benchmark for every one of those asset classes, and then we look at the returns of those, we roll them up, and we weight them based on the weighting of each of those assets in the asset class. So let me just, you did a flyby there of that slides. I did mention the board is also responsible for establishing the responsible investing policy for ATRF. So that covers all aspects of responsible investing, which some people also would refer to as ESG, environmental, social, and governance. We take all of those elements of responsible investing seriously, and we make sure that AIMCO is also taking them very seriously and making sure that the way they invest our assets are consistent with our views on environmental, social, and governance matters. But I want to speak specifically to a piece of the environmental, the E of ESG, because what you see on the slide is a resolution that was passed by the ATRF board last year, and it's in response to a lot of focus in the pension investment industry around the impacts of climate change and the impacts that those have on the pension plan globally, across the board, because climate change affects the long-term sustainability of pension plans. And more specifically, it impacts the investments in the pension plan. And so the board passed the resolution that you're reading in front of you, recognizing the important consequences of climate change and the need to put in place an educational program on climate change for the board's benefit so they can develop an action plan and an enhanced responsible investment policy no later than June of this year, June of 2024. That work is well underway, and we do plan to deliver a climate change action plan for the pension plan by this spring, by June of 2024. And that's the end of the piece that I was going to talk to, because now I'll turn it over to Julie to talk about member services at ATRF.
Yes, and I don't see any questions in the Q&A, so I will move to the next section. Sorry about the little bit of a change of slides issue. I have too many screens and too many mouses. So thank you so much for having us. It is always a pleasure to talk with members and ARTA in particular. We are sharing information with you today that is really hot off the press, so much so that it's not even officially published on our website, but it's coming. So of course, the good news stories that we're sharing today with you, I know it's hard in the larger group, but we will be sharing that with the public and our members in the next 2-3 weeks. So this is really advanced information for you. I was reading again the description of the session today and trying to find a way to really link it to financial wellness. And so Rod mentioned, talk more about the robust and strong financial health of the plan, resulting in those good results and contribution decrease, but also surplus. So I was looking at what can I say about our members. And in fact, I added a slide, Rod, just in case we were running out of content. But not only that, I realized that the word longevity, there's a lot to say about that. And we have really good information. So I've added a slide specific to longevity of our members and teachers. So member services, what we provide, of course, is always centered around our members and providing expert-friendly and supportive, caring service to Alberta teachers from end to end, so from beginning of career and up to retirement, and of course during their journey within retirement. So we're here for you. That's the main theme of member services and what my team and others are doing at ATRF. So who are those members? Again, you'll see a lot of numbers. I'm an actuary by background, so I love stats. But yes, we have really good knowledge and intel when we look at numbers and behaviors, and trying to see trends and what to expect in the future. And that also feeds the assumption for the valuation, for example. So we do have more than 86,000 plan members now overall that we're serving every day, day in, day out, on multiple things, and always with a personalized approach as much as possible. And retired members that you see here at 37% of the overall is definitely a growing sector of our plan membership. The active members are a little bit more stable, although, things can change. And the retired members are growing. We have a very stable new retired members population per year, but living longer. So we have new retirees, but also current retirees that are staying in the plan longer. It is now above 30,000 retired members and beneficiaries. So some of the stats that we like to provide, like the average age of retirement, which has been very stable, I have to say. So our new retirees are retiring around age 60 with 25 years of pensionable service. And that's in the Alberta plan. They might have, some service elsewhere, but if they haven't transferred it, this is what's in the plan. Pretty stable. It used to be a little bit earlier retirement at some point, but before that was much later. So there is a bit of a trend, and now it's stabilizing around age 60. Our active member, very stable age, around 42, and around 12 years of service that they have accrued. Again, that's the active. So you have new ones with 0, and you have those that are almost retiring with 30 or 35 years of service. And our retired member age is increasing, of course. Like I said, we have new ones, but the ones that are currently there are staying and getting older, which is a great news for everyone. And we are here to make sure that you're going to receive your lifetime pension, no matter how long that is. And that's why we need to have a really healthy fund to do that. We have crossed a very important milestone when it comes to employers that we work with. We are now 100 employers, like rounded, not even like it's the specific numbers, 100 employees that we work with. That's quite impressive. It's been increasing slightly year over year. We have 56 members that are age 100 and plus, or centenarian, a word that I cannot say. That's why I'm trying to say it differently. 56 members are centenarians. So that's impressive. It was 51 last year. So 5 more, that's 10% more members that are age 100 and plus. That's quite an increase. And you would not see that before. So impressive. Our average annual pension currently in payment. So of course that's different if you look at, all retirees combined versus newer retirees, but all retirees combined are receiving on average $37,000 a year from the ATRF plan. That's up 4.7% over last year. The main reason for the increase, to be fair, is indexation, inflation. You might remember last year, January 1st, 2023, was quite an adjustment with inflation of over 6%. So our pensions, of course, increase in proportion. That's 60 or 70% of the inflation. Our oldest plan member, speaking of longevity, 105 years old, and has been receiving their pension for 41 years. So usually there's some applause when I say that, but unfortunately there's no audio. So I will trust that it is well received. This is just showing the new retired members per year. I'm going back way in the past, but just to see you some of the trends, pretty stable. I have to say, like around 1,000 new retired members that are joining your ranks every year. But you can see that there's some cycle, and the highest that we've seen is around 1,400 in 2007. There was something in that year, I think, with either negotiation or I'm not sure. I wasn't there. And we are expecting around 1,000 in the future as well, based on assumptions and demographics. We're still projecting 1,000 new retirees per year. That's the new slide I added that Rod didn't see about longevity. So this is from annual reports from the past or presentation we've done in the past, but it's always very interesting to bring back. So that's the comparison of how long pensions are being paid from pension plan. This is specific to our plans, but it's not uncommon in teachers' pension plans to see that, you know, you're contributing to the plan sometimes shorter than you're going to receive your pension. So back in the 70s, people were retiring a little bit later, around 62 instead of 60 now. And therefore, and the life expectancy was shorter. So on average, teachers were receiving their pension for 20 years. Whereas now, with the life expectancy that have substantially increased, we're looking at 31 years on average of collecting a pension. And where does that come from? Well, retiring at 60 with a life expectancy of, you know, almost 9 years old on average. And that's the second little table there. We do experience steady or, you know, mortality study with our actuaries every 3 or 4 years based on our plan specific experience and looking at how long people are living and looking male and female, seeing some of the trends. And you've seen from the last experience study that we did in 2020 that the life expectancy increased substantially. I know it doesn't seem substantial when we talk about 1 year or 2 years, but it is substantial when it comes to life expectancy, and it is substantial from a plan liabilities perspective as well. For 1 year increase in life expectancy, your liabilities would increase by 3 or 4%. So the last study, the male members, their life expectancy increased by almost 2 years. So they're coming closer to their woman counterpart. The gap is reducing. It used to be a little bit larger because the female, yes, they're still living a bit longer, but their life expectancy increased by half a year instead of 2 years in our plan, but also in the general population. You can see that as well. So a teacher in our plan is expected to live around 90 years old for a male and 91 years old for a female. That's higher than the general population in Canada. I don't want to quote the wrong number, but I think it's 83 and 86 for the general population. And that's at age 65 as well, just to be clear. Another stat that is also interesting to look at from a demographic, but also from a funding, is the ratio of active to retired members, or in this case, active. That's what I said, active to retired members. It's a declining ratio, meaning that our active population is very stable and our retired member population is increasing. Therefore, we have more retirees compared to active. We're still above 1, so that means we still have slightly more active than retired, but it's a decreasing number, and it's projected to continue to decrease. That's not alarming at all. I mean, it's expected. It's called plan maturity. We know our plan is maturing, and we just have to fund accordingly. Yes, it's easier to fund when you have more active, because then you have contribution as a lever that is a powerful one. But a plan can definitely be sustainable with an active to retired member ratio closer to 1 or even below 1. There are some plans that have more retirees than active. It's just, you have to fund accordingly. And I added a few more stats in terms of longevity and older members. The one at the top, I just want to mention, it's more of a financial one, but it's an impressive one. I always like to look at it. We pay $90 million in pension every month. That comes back to the economy, back to you members. So $90 million per month, or $1 billion per year. We crossed that very important threshold of $1 billion of pension payment. We pay other type of benefits, but that's just pension. And as mentioned just below, 85% of our retirement members live in Alberta. So that money should be coming back to our economy and taxes. Okay. So I see a question in the Q&A. I think that's a really good one. It's about the APP, Rod. I will just finish my section and I'll come back to that question right after, because we do have a more general Q&A section. So we saw who we serve. Now, you know, what's coming, where are we doing, what have we done in terms of different type of services or new features that we're offering to all our plan members, including retired members. One of the things we've added recently, or well, I guess a few months ago now, document uploads in our My Pension portal. So our My Pension portal is your secure member portal where you can find all your personalized information, do some transaction, see some really good information about your own file, your own profile. And now you know, there's a secure messaging there. But what we've added is that you can upload documents as well. So attach document with your message in a very secure and timely and convenient way. So if we want to give us a form of some kind or a document to prove something, then you can do it through My Pension, which is very efficient, very easy to use. Just reiterating communication preference that you can put in My Pension as well, paper versus electronic. We're really strong about personal and preference whenever possible. And we understand that there are some documents with personal information that you want to have paper. Statement may be one of them. T4 might be another one. But electronic is also very useful. So you can put your preference in My Pension. We have new videos as well. Again, trying to have different channels, different way of communicating, of interacting. Not for everybody, but you know, it can work. We're trying to keep them short and interesting. So we have 2 new ones, mainly for people joining the plan for the first time, but a really good overview of the plan as well. And I know as a retired member, you say, well, do I need to know that? Well, just sometimes it's just a refresher of what the plan provides. We're trying to stay connected with you in different ways, different publication, different ways to interact. Presentations like today is one. But you know, we're always here, phone call away, a visit away, or an email away. We do appointments. So as a retired member, you know, just to make sure that you have focused quality time with us, make an appointment, and we'll be there on the phone, on a video call, or in person, depending on your preference. And of course, any feedback and suggestions that you have, please let us know. You have our email address there. We're always interested to know what you want to know and what you're interested about. Speaking of feedback, we did our all plan member survey last spring. Thank you so much for all your responses. We sent it to over 67,000 members, and we had 19% response. So that's 10,000 plus members who took the time to respond and providing so much valuable input. It's amazing what we have in there. We have nuggets of information that we use to do action planning, to really understand what your needs and wants are, and you know, trying to continue to evolve and meet those needs, because they are changing. Things are changing around us, and we want to make sure that we're continuing to meet what works for you. So we have a few stats there. I won't go through all of them, but you can see that in general, overall, when it comes to our services, our approach to services, our caring and personalized approach seems to be working. We have ratings of 80, 90%, depending on the categories. So those are very good results for us, but also, you know, compared to the industry, we seem to be doing very well. But we're not sitting on them. That I can reassure you. For me, the bar is never high enough. I think Rod sometimes tells me, Julie, you have to be realistic. But you know, we have to start with a dream and then see what we can do with that. So always pushing what we can do. Of course, reasonable cost and bring value. That's what's driving us. But there's a lot we can do, and things evolve, and we want to be there with this new ways of doing things. Which talks about Project Lantern. This is exactly what Project Lantern is about. If you're not a new attendee, you might have heard the word Project Lantern before. It's a multi-year, multi-phases project that we have started to modernize and future orient our tools, but also our process and the way we do things. Again, with that continuous improvement, evolution mindset. If we sit on it, it's going to become stale, and we're gonna be behind. So it's always keeping up, reasonable cost, a lot of value, and making sure that we have the tools to continue to meet your needs and deliver what we're supposed to deliver in terms of services, benefits, payment, information, everything. So it's a very important project. It's not just about technology, but there's a big piece of technology in there for sure. We've been very fortunate to have a very good system for a very long time. We just need to continue to make sure that it's up to date and meeting our needs and yours. So you might not see a lot of the work that's been done. There's a lot of work being done, but maybe it's a little bit more in the background. As a member, you might see some incremental improvements or new features in my pension portal, for example, or things like my appointment or things like that. So it won't be a big bang necessarily, but we will make sure to continue to inform you of what's available, the new features, and make sure that you can use them based on your preference. Before I go to the Q&A, of course, a very important topic, cost of living adjustment, like Rod mentioned at the beginning of the presentation. The Teachers Plan has a feature that is called COLA, and it is to help keep up with inflation. And we use the word help because it's a partial indexation. It's a very important and good feature of the plan. Not every pension plan has it, that I can tell you. I've worked with other pension plans that don't have it or have it lower or have it conditional. Whereas in our plan, it's guaranteed to be a certain percentage of the inflation in Alberta. Many plans have it as a conditional indexation based on the plan's financial status. So if the plan can afford it, they pay it. If they can't, they don't, or they pay partial. In our case, guaranteed, and I'm sure you all know the formula. So for service before January 1st, 1993, it's 60% of the Alberta inflation. And for service after, it's 70%. This year, and the inflation is calculated from November to October every year. So it's not a calendar inflation, it's a November to October. So this year the calculation is done and it's now available. It's been communicated in December. As soon as we have the numbers, we're communicating them because I know it's of interest to everyone. So this year the inflation rate was 3.9%, and therefore the pensions have been, because we're now past January 1st, have been adjusted as of January 1st, 2024, according to the percentage on this slide. So 2.34 for service before 93 and 2.73% after. So of course, if you have a combination of service before and after, then you'll have a combination of inflation adjustment. And it's kind of prorated based on the service and in each bucket. If you want to know your own detailed calculation of what it is, you're going to have the amount on your annual statement. As of January 1st, 2024, you'll see the before and after inflation adjustment. But that's going to be the combined number. If you want to see the detail, it's in my pension. So in my pension, there's a tab and it shows your breakdown calculation, and it's very, very easy to see. And I invite you to go there if you want to know more. But it will be these number to a certain combination. If you only have post, then it's 2.73%. Speaking of what's available in my pension, because there are communication coming up in January, it's a big month for us and retired members. And apparently there's a lot of people wanting to know about tax slips. So the tax slips, the really amazing thing from us is that as soon as year end is done, they're available electronically on my pension. So tax slips are available as we speak on your My Pension account for the 2023 year. So that's impressive. I say that because, again, I've worked with other plans, and sometimes it's hard to meet the February 28th deadline to send the tax slips. So they are available electronically, but of course the printing and the mailing takes a little bit more time. But we are also aiming to send that as soon as possible, and the paper version by mail will be available at the end of January. So we're gonna print everything, mail everything, and hopefully you'll have it in your mailbox by end of January, early February, depending on mailing time. Again, electronically available on My Pension. So if you want to see it, have it early, please go on and access it. If you're not registered, it's easy to do. There's a guide to help you register on My Pension, and call us if there's anything that you have issues with. So that's a big one in January in terms of mailing the tax slips. Your pension information statements, so that's your annual statement with a lot of good information about your pension before and after COLA, the tax that are being deducted. It shows your profile, such as your spouse, your beneficiary, the pension option you've selected in terms of your survivor. So this is a document that is very important to look at every year, making sure that everything is updated, that we have the information we should have. And if there's anything to be updated, you can do it on My Pension or call us and we can do it for you. And of course, our annual report, as I mentioned, we're sharing with you the information that will be all in this annual and member report in advance, but it will be published by the end of January as well. So annual report is on our website, and member report is mailed or electronically available, depending on your preference. And that is it for me. So it's 2:00, 2:01. My understanding is that we do have a few more minutes for Q&A. So if that's okay, then I will go with the question on APP. And the person says 4 rods, so I will, I'll be happy to supplement, but what advice in regards to what teachers need to do about the Alberta government wanting to pull out of CPP?
Julie, you're just as capable as me. Why don't you carry on?
Sure.
You get this question all the time. Members, this is no surprise we get asked this, because we have lots of members that are asking this or very related questions.
For sure. And what I can say is that it's not necessarily as an Alberta teachers, because your teacher's pension plan is not impacted directly by the CPP. There's a link to the CPP, but it's just through the YMP, the formula that we use to calculate pension and contribution. But what CPP does on this side, or APP for that matter, doesn't impact your teacher's pension plan in its current state. If they change legislation, well, that's another ballgame. But it's not about your teacher's pension that I would say what advice we could give, and we cannot really give advice on APP because there's a lot of unknown and a lot of speculation at this point. What advice I would say though is, as a citizen, as an Alberta citizen, keep yourself informed about that option, about that idea. Get the information you need to be ready if there's a question asked at some point about this potential. And we do the same. As a trusted advisor, of course, we stay very close to whatever is happening in the pension industry and in the pension puzzle that includes social programs such as CPP and OAS. But from, like I said, from a direct impact on the teacher's plan, none that would be obvious unless they change something. And stay informed and have a voice if you want to have a voice. There are some opportunities to do so. And it's an important piece of our puzzle, of retirement puzzle. Did I do a good job, Rod?
Excellent. It's not the first time you've answered that.
It's not. I I agree. And we'll be there. We'll be there, whatever happens, and we'll be hopefully there to inform and provide trusted information whenever is needed.
Okay, I don't see any other questions, so I guess we'll just wrap it up. We'd like to thank you, Rod and Julie, for presenting with us today, and thank you to the attendees for joining. We will be sending out a survey following this session. It'll take less than 5 minutes to complete. We value your feedback as we plan future pension and financial wellness webinars. This now concludes our webinar, and have a great day and a wonderful new year, everybody. Thank you very much.
Thank you, everyone.
Thank you so much.